This is one of the most undervalued tech stocks currently in the market, in my opinion. Tech has had a great run up so far in 2024 and back in 2023. However, Adobe has dropped since the start of this year because of several reasons that I'll be covering in this video. This is an amazing stock and business, and I'll be covering the business itself, the financials, and what they tell us about this company, followed by whether Adobe is a buy right now. As always guys, if you like this video, then don't forget to subscribe to the channel, and please forgive the voice, I currently have a cold. Without wasting your time, let's cover the reasons Adobe's position has gone down so much this year. Adobe is down around 17% year to date, and the reason for this is firstly, the market seems very unsure of Adobe's AI strategy, which is a lot of the focus right now with today's stocks. Specifically for Adobe, I believe investors are concerned that OpenAI's model Sora may disrupt Adobe's cloud business. Secondly, they have reported good earnings in the last quarter in March 2024. However, the guidance they gave of slightly less revenue growth than was expected for future quarters also impacted the stock. And finally, I think the interest rates are still very high, with the Fed talking about only having one rate cut this year, which I don't think helps their situation at all. This all leads us to a share price for Adobe of $480 or so compared to the highs that we saw for the stock sitting around $620 around February and January time 2024. Adobe's been a bit slow to the AI party, it would seem. They've started releasing more generative AI tools to its subscribers recently, with tools being integrated into the likes of Photoshop, Adobe Acrobat PDF Reader, and similar apps. These tools include AI text-to-image, creating an image from scratch from a text description, and text-to-video, which is basically the same thing but obviously for video. Unfortunately, many of these are in the beta stage and not really making any money yet, and as they have been released as part of current subscriptions and just added to the product. Now, Adobe is planning on monetizing their AI tools in the second half of 2024. They've actually stated they are confident in their guidance and targets for the full year, and that the second half of the year will see many of these AI tools move out of those beta stages and become monetized. This may have led to the downturn in Adobe stock as well, but this is a bit more of an opportunity if you ask me. Adobe's subscription-based model will allow the monetization of these generative AI tools to reach all of their different products and pricing plans. They have already started creating new pricing plans offering the AI assistant as an early access package, and I think this trend will continue with Adobe's pricing strategy. The reason I think this is an undervalued, excellent business with great long-term growth opportunities is firstly its dominance in the creative cloud space. With 60% of the market share in this area, they've beat out the likes of Microsoft Azure by 45%. And then we've got its brand loyalty in terms of its products. Their subscription-based model surrounding products like Photoshop, Creative Cloud, Acrobat Reader and Illustrator's tools are highly profitable and so well established in institutional learning for industries that it makes them actually quite hard for the likes of editors, photographers to content creators to get away from. You have professionals using Photoshop for image editing, content creators using Premiere Pro for video editing, with the education system using these tools to teach in universities and colleges, and I don't see that changing. In a similar way to Apple, once you are in the Adobe Cloud ecosystem, it's very hard to get back out of using their products because of the high standard they provide and the compatibility with all their other products. I mean, they created the PDF Reader document, Adobe Acrobat Reader, which is the most popular PDF reader in the world. So I think they have set the standard for their competitors. And there are competitors like Canva, Autodesk, WordPress and Microsoft in certain areas. But they only really compete with Adobe's different apps like Photoshop or Illustrator. They don't really offer the connectivity that Adobe does with all of its products interacting and working well together. Now, the financials of this business are impressive as well, with the incredible predictable revenue growth that just seems to never dip. Now bear in mind COVID sat just right here in 2019 to 2020 and it doesn't even register on the graph. Year by year, quarter by quarter, it seems to keep getting better. Not many companies can really boast that, generating 19.9 billion revenue up to March 2024, up 16% over the past 5 years, year over year. Now, net income bottom line has had good growth in the past, but is currently very flat for the past 3 years, even down to $4.8 billion. However, if we switch over to their operating income, we can see that this has been steadily growing alongside revenue, up 20% year over year in the past 5 years to $7 billion. Their cash position has seen plenty of growth, up 32% in the past 5 years to $6.5 billion, which is compared to their long-term debt situation of $3.6 billion, so remaining flat. So they could actually pay it off comfortably in 1 year if they really wanted to. Now we get to their free cash flows, which look good over the past 5 years or so, but more recently seeming a bit flat to me. Sitting at $6.5 billion, down from $7.6 billion in December 2023. So altogether, I think their financials are fair and predictable. However, it has struggled in the past year or so. But does that necessarily mean Adobe is attractive at its current valuation? Well, Wall Street thinks so, with Adobe's average forecast at $634 per share, a 33% upside from the current share price, and their high forecast sitting at $769 per share, a 62% upside. But we do have a lowest forecast that is below the share price of $449 per share, representing about a 5% downside. Additionally to that, Morningstar currently have a fair value of this one that sits at $610 per share for Adobe stock. So it could represent an actual buying opportunity for Adobe with the current share price and analyst estimates. Now there are risks with this stock that we've sort of identified in this video. Firstly, that they may not hit this year's guidance. I hope that they will. Their management have said that they will. But if they had a bad year in terms of financials, I don't think this would be the worst thing if you wanted to develop a position with Adobe, because you can get them at a lower share price. Now, additionally to that, I think what you're paying for is the long-term strategy for growth. So their monetization strategy in terms of their simple AI tools, I think will be good and work over long term. As they've proved with their products, they're just invaluable. And how they've actually just not been disrupted by OpenAI's Sora model, I don't think that's really possible. They're simply too well established as the golden standard for content editing in terms of software in general. So even if they have a bad year in financials, I think that may present a buying opportunity with Adobe stock. Now for me, I do think this represents a good buying opportunity with Adobe, and for my personal portfolio, I wouldn't mind actually adding them. I think they'd be a safer bet than some others, and generally speaking, I do think I really like their business outlook, how they will progress going forward, their potential with AI growth, and generally I'm not too concerned by a bad financial year maybe. So for me, it would represent a buying opportunity. I don't really have the cash for doing so. When I add some money to this account, I will actually be actively considering them. But let me know what you think on this stock down below, and of course, best of luck with your investing. Sorry about the voice. Take care guys, and I'll see you in the next one.